Hello, happy new year first and foremost. Um, so this is a quick introduction to, I guess, my channel first and foremost, where I'll be providing some market outlooks, pre-market analysis, post-market analysis, essentially 5 days a week, even on the days that I don't take a trade. Today, I actually missed the buy that I feel like would have marked the start of the year very well. I'm watching the index right now, only because my index futures is delayed. I haven't bought the actual index futures one. This is just me being completely transparent. I haven't bought the index futures market yet, so this is delayed. So I more time. I just observe the actual index instead. So going into both indices, obviously first and foremost, starting out the day on S&P, we can confirm at least after today. I would like to confirm that we are bearish. Otherwise, we would have, you know, actually at least bounced back from this new week opening gap, or this, opening range gap that was formed last week that we mitigated at the end of yesterday, really, or the start of this market open. So yeah, I'd like to think that we're bearish, especially because we've taken out buy side liquidity. We formed an all-time high just before the end of the year. And then obviously going into Nasdaq as well, we actually haven't, but we formed SMT divergence on higher time frames, which could solidify, which could basically mark us down for a bearish start to the year. And I'm happy because at least it's not consolidating. I hate Januaries that start with range and markets. Obviously, Januaries aren't the best for trading anyway because it's the start of the year. Investors aren't really ready to delve right into the market straight away. So price can be speculating a bit more often or a bit more frequently than we hope for, sort of thing. So yeah. Anyway, getting into price action. I was looking at both Nasdaq and NQ today as I normally do. Obviously going into the 1 hour, what allowed me to frame a setup was this, or it was the daily fair value gap for Nasdaq, and then it was the obviously new week opening gap for S&P. So it was the S&P that I started off with. So we all go into the S&P, and then we'll go into our entries on Nasdaq. So yeah, new week opening gap here, and then going into the 1 hour. I don't know why I took that off. Or maybe not. It was in the index future. So yeah, let's go into the 15 minutes straight away. So yeah, we bounced off here from the new week opening gap. We started bullishly expanding. So I actually did know that this was going to happen, to be fair, because we expanded from Asia. We didn't consolidate during Asia. Normally when you have two consecutive sessions and we're bullish with no correction, we're probably not going to have a third session. For flip's sake, probably not going to... Hey, listen, I've got money, don't worry, I got money, it's on my other account. But anyway, we're probably not going to have a third session expanding. Does that make sense? Like, our third session is probably going to be a corrective session or reversal. And in this case, we reversed. But first, we actually formed a buy that a lot of people probably took today. So this was the buy. Going into the 5 minute, see our Judah swing low. We took out sell side liquidity at the same time, forming SMT divergence with this index and obviously Nasdaq as well. So that is obviously going to be a good buy scenario. So yeah, going back into the S&P again, form SMT divergence, and we had our Judah swing low. Or essentially I wanted this to be our Judah swing low. So we're both below midnight opening price here, and we're below New York opening price too. This is basically this is my model. This is my setup. This is what I do. And with forming this low, we also mitigated a 1 hour fair value gap. So I thought, okay, cool, no doubt we're gonna take this. We're at least gonna take this, and then we're probably gonna reverse because we've had a very large bullish session. And in my opinion, I was even thinking that we were counter trend trading anyway, because we've been bearish since taking out higher time frame, or since taking out the last all-time high. So I already thought, yeah, this is probably going to be a counter trend trade, so make sure you're not holding it, essentially. So yeah, man, we did that. We expanded bullish. A lot of people entered off of a 1 minute inversion fair value gap, which I guess I should have entered off of that as well. But I was literally watching it as we go. I think a lot of people entered right here. Like literally right here. Probably would have put their stop just below, and then TP for like a 1 to 2 or something, which is fair enough. I probably should have entered off here as well, but I wanted to just wait for a correction just to be on the safe side. And we didn't get that, unfortunately. We just went straight in to take out that buy side. So yeah, that was what happened today. That was the at least what I would have gotten involved in. Probably also would have potentially got involved in this as well. We actually had a correction here to take this out. So that is something that we could have done too. I feel like I don't really. We can probably still continue to go down for PM session if I'm honest with you, but I don't know. We've already taken out everything that we wanted to take out. We've got a lot of imbalance to cover now, so we'll see what happens throughout the end of the PM session. But yeah, man. Again, just to give you an introduction to myself, my name is Emmanuel. This channel's probably gonna be called "Leave Me Out of It" or something like that. And yeah, man, I've been trading for quite a while now. But you'll hear more of me, man. I don't like formal introductions. You'll hear more of me through my videos. I'm gonna be a bit more active online in general, to share my trading journey, my trading experiences as well. I also trade gold too, so yeah, you'll see a lot of work for me with gold play and with obviously futures play too. But yeah, man, yeah, stay for the journey, and I hope everyone is, learning accordingly with their journey too, and doing their due diligence and just studying the markets, essentially studying the markets and following the model that you're studying, that you're testing out. And just don't be impulsive, man. Believe me, just don't be impulsive, man. But yeah, man,